Welcome, everybody, and welcome back to the Morning Edge webinar. And let's go on and finish up the news and then get on to the bias chart. So it says gold hits 1 month high after Trump doubts knocked the dollar and stocks. Gold rallied more than 1% on Monday after U.S. President Donald Trump's failure to push through healthcare reform package on Friday questions over his ability to deliver promised tax cuts and spending plans. That knocked the dollar to a 4-month low versus the currency basket and drove a drop in stock markets, with European indices sliding nearly 1% in early trade and U.S. stock index futures hitting 6-week lows. Spot gold was up 1.1% at 1257.08 an ounce, having touched a 1-month high of 1259.14. U.S. gold futures for April delivery were up 8.60 an ounce at 1257.10. Trump's spectacular failure to get his health bill through Congress raises concerns over his ability to achieve his goals and other policies. Saxos Bank's head of commodity research, Ole Hansen, said, with stocks, the dollar and bond yields lower and geopolitical risks on the rise, gold may stand out as a commodity choice at such time. Gold had rallied sharply from its March 15th low, following a less hawkish policy statement than expected from the Federal Reserve, which dampened expectations for near-term increases in U.S. interest rates. Gold is highly sensitive to rising U.S. interest rates, with increased opportunity cost of holding the yellow-yielding bullion, non-yielding bullion, while boosting the dollar in which it's priced. The metal ran into resistance in early trade at its 200-day moving average, currently at 1259 an ounce, a level that has halted last month's sharp price rally. The world's largest, if it were to rise lastingly among this threshold, we could see technical follow-up buying. Commerce Bank said in a note. That said, an attempt to exceed the 200-day moving average proved abortive at the end of February, causing the gold price to shed almost $70 in the subsequent days. The world's largest gold-backed exchange-traded fund, the Spiders, reported outflow of 1.8 tons on Friday. U.S. Commodity Futures Trading Commission data showed on Friday, however, that hedge funds and money managers boosted their net longs in COMEX gold in the week to March 24th after 2 weeks of cuts. China's net gold imports via main conduit Hong Kong rose 50.8% month-on-month in February to 47.931 tons. So that's definitely going to be, supportive of any pullbacks. And we'll finish up with the oil here. A joint committee of ministers from OPEC and non-OPEC oil producers has agreed to review whether a global pact to limit supply should be extended by 6 months, it said in a statement on Sunday. An earlier draft of the statement had said committee reports high level of conformity and recommends 6-month extension. But the final version said only that the committee had requested a technical group and for the OPEC secretariat to review the oil market conditions and revert in April 2017 regarding the extension of the voluntary production adjustments. Oil sector analysts said the lack of an immediate extension could drag on oil prices. The dropping of the recommendation to extend cuts in favor of technical review committee is likely to lead a lot of disappointment and potential further liquidation of long positions by money managers that will put downward pressure on oil prices, said Harry Tishliguerian, head of commodity strategy at BNP Paribas in London. It was not immediately clear why the wording had been changed, although a senior industry source said the committee lacked the legal mandate to recommend an extension. The Organization of Petroleum Exporting Countries and rival oil-producing nations were meeting in Kuwait to review progress with their global pact to cut supplies. The OPEC and 11 other leading nations, including Russia, agreed in December to cut the combined output by almost 1.8 million barrels per day in the first half of the year. The original deal was to last 6 months with the possibility of a 6-month extension. Any country has the freedom to say whether they do or they don't support an extension. Unless we have conformity with everybody, we cannot go ahead with the extension of the deal, Kuwait Oil Minister Issam Marcous said, adding that he hoped a decision would come by the end of April. The Oil Ministerial Committee expressed its satisfaction with the progress made towards full conformity with the voluntary production adjustments and encouraged all participants countries to press on towards 100% conformity, the statement said. The December accord aimed at supporting the oil market has lifted crude to more than $50 a barrel, but the price gain has encouraged U.S. shale producers, which are not part of the pact, to boost output. Currently, we have the May crude at 47.59. The committee said it took note that certain factors such as low seasonal demand, refinery maintenance, and rising non-OPEC supply had led to an increase in crude oil stocks. It also observed the liquidation of positions by financial players. However, the end of the refinery maintenance season and noticeable slowdown in U.S. stock build, as well as the reduction in floating storage, will support the positive efforts that undertaken to achieve stability in the market, it said. It asked that the OPEC secretary to review the oil market conditions and come back with recommendations in April regarding an extension of the agreement. That reaffirms the commitment of OPEC and participating non-OPEC countries to continue to cooperate. Russian Energy Minister Alexander Novak said it was too early to say whether there'd be an extension, although the agreement was working well and countries were committed to 100% compliance. Olive Jacob of oil consultant Petromatrix said the revision of the ministerial committee's statement, it was becoming more difficult to know who is responsible for it in OPEC. This is not the best option to provide clarity to the oil markets. And that's probably why you're seeing the oil, one of the reasons you continue to see the oil continue to slide here as it's gone under 50, I would think. Ellen Wall, the consultant on the global energy industry, said, I think the market will react negatively to the lack of clear direction on the rollover for the deal. Before the meeting, Iraq Oil Minister Jabbar Ali al-Luabi told reporters there were some encouraging elements that suggested the oil market was improving and that if the OPEC members agreed measures would help price stability, Iraq would support such steps. Any decision taken unanimously by members of the OPEC, Iraq will be part of the decision and will not be deviating from this. Iraq's oil production is running at 43.12 million barrels per day. Luabi said this added the country had cut its exports by 187,000 barrels per day so far and reached 210,000 barrels per day in a few days. Russia's committed to cuts of 300,000 barrels per day by the end of April, Novak said. Novak said he expects global oil stocks to decrease in the second quarter of this year. The dynamics are positive here. I believe, Novak said, adding that inventories in the United States and other industrialized countries had risen by less than in the past. So let's go on and move into the charts. Let's bring over the bias chart. Okay, this is Friday's data. We had, we had our resistance at 859. We've come up here to this level here on the euro, and well, you can see the notes ahead. Current move set to test the 859 top of the 2-hour with an eventual test at finish at 959. We've come up here to this 859, which is the top of the zone. Not only did we get there, you can see here this prior high, which was in December. That was 874 or 873, and that's like what we ran right to here. This is also $865 is 161% projection of this recent range. Now we're still pushing to the highs. One of the reasons we're pushing to the highs is the bonds are rebounding just a bit after a little sell-off, so we'll go into that. Now we looked at this earlier. Well, like I said, when you come on, we do look at a quick overview of some technicals, and we do have appears to be on the 4-hour chart a little gravestone doji here on the bonds. We got up to this 51.24. 51.23 is our level here on the bias from Friday. We pushed them up even higher here, But if you look here on the 5-minute chart, this is the area I was mentioning some people. This is your reactionary, your risk level here after we come up here to 52.03. We dropped all the way down to 51.17. This is the risk punch right here at 51.27 on the 5-minute. Pointed that out to some people a little while ago before the webinar. And so we're coming back up here. You're seeing a little bit of pushback of 3 pips, but at the same token, that pushback off of these lows has provided the boost here for the euro to come up to these highs. You can see they're taking out the highs right now. The euro, you're seeing the bonds. Now this is on the futures, pushing up even higher. The dollar Swiss is coming under some pressure. Now this is all on the here, but let's go on and move into the 2-hour charts again. This is also picking up gold from its lows, but gold's trading in a relatively tight range. You can see here. It's picking itself off of the lows, trading in a very tight range, but you can see this pushback in the ZBs has allowed the bonds after they came, the gold after it dipped below 57 to come right back up here. Thing is, though, we're still in a buy mode. Not in the 5-minute we kind of dipped here, but you can see in this 30-minute, we're just not seeing any type of a reversal here. And the key thing to look at the bonds in the Asian session was that we closed just above this 52.30, if you see that here, right there on this 2-hour chart. You see how we closed above that level, and they've been having trouble with this level all along. See right here. That opened the door for this market technically to move higher. Amanda says good morning. So does Hasselhoff. Good morning, guys. So when we look over here at the euro, we've taken out the 859. We've taken out the 859, which is the top of the zone, which that's what we were looking at from before. And we also just got just a hair above this 161%. There's quite a bit of, if you look at here, this 883 to 904, just a lot of volume trading in there. Even though it doesn't appear as much, but I'm saying this quite a bit. What you want to do is you want to keep an eye on the bonds. The thing is I don't think this stuff is going to go on and resolve itself until we get into the U.S. Open, and they want to see how the cash equities open up, if they got that pressure, because most people would think you're going to get, and the S&Ps are off their lows. They're actually pushing even higher, 23, 27 and a quarter, now at 23, 27. But I think that's a thought. Let's get them into the U.S. equity open, and let's see how these markets react. And I think that's the deal here. But we've got pretty good resistance. Pull this out. Well, I'll say good volume all the way up in here. Like right there, that's some good volume, which comes in at 109, 899. All that is good in here. See, good volume between 876 to 109. So they may just meander themselves, trying to push them higher and goose some stops. But what you want to do is you want to pay attention to what's happening here in the bonds, in the ZVs. And as you can see here, that's where I noted here, I was talking to some people. There's your risk area here on the bonds right now. It's 51.27. I was pointing that out, and we're down here, and you can see that they made that run up in here, and now they get a little bit of a pushback. If they can push higher, then that opens the door for them to go higher. We do have this little gravestone doji, but like I said, I don't think we can make any real moves until we get past the U.S. cash equity open, and they get to see how the market reacts. But you can see the S&Ps overall are holding up decently. I mean, like I said, I'm sure some people are surprised, thinking we could have taken a dip into the single digits or into the low teens. Heck, looks like we only made down to about 23.17 and change. So holding up relatively well. So let's go back in here to the 2-hour charts on the euro. So for our resistance, we're going to say 903 on here, just a little bit, like I said, see if they, where they could push them a little bit high. I'm going to say 903. Obviously, definitely bullish. And let's take a look where support would come in. You see, we're taking our time with this analysis. We're not trying to rush through it, trying to have an overall game plan where you're trying to, like I said, not just go into technicals, but seeing how some of these markets will correlate, and so you don't rush into it too quick. Support. You can look at this gap fill right there. So you can say support comes in at 818. So we'll say 816. A little bit tight, but like I said, this market is definitely bullish. So there's no reason why people are going to try to, if it gets down there, they're just trying to cover shorts or trying to pick them up. So that's on the euro, 816 and 903. Let's go on and get here into the cable. And wow, we've had a pretty good run here. We've even gone past the 78%. We always say, you know how cable loves the 78%, and it definitely got there. There was a little bit of pushback. We showed that earlier in the session when we were covering the technicals on the overview. And there was some pushback of about 22 pips, and then we reassert ourselves here. When I look here, I think we'd already pulled this one up, and I think they're pretty stretched right now. But I think we were actually looking at 26.32, and right now we've got here like 26.34. How far it can go, and I'm not sure if it would make it up that high, but I'm saying is that would be, because if you look at it, euros pushed to new highs, yet cable's not joining it. So what we're trying to look at is what are the risk levels up in here, or where's a target where we shoot to? And I'm looking here, and this is going to be 26.32. And you can see we had our resistance before at the 78%. That's at 25.79. We did back off 22 pips, and then we just reassert ourselves. We're going to go with 26.32, but you can see how because we've come so far. The euro's pushing the new highs, but you see how the cable's not taking out its highs. Now, the cable's already come a long ways, a heck of a long ways. But it just might be just a little bit too stretched. Because like I said, you know, with the euro, we talked about that. since last week, we said, hey, look, if you're looking for further upside targets where people are probably saying, I'm bullish the euro, I don't care. Well, then I think you have to look at, I think we pointed out, which is 934, which is a 61%. We'll show it here. You see here, 934. I will move this over here. Move that too. Oh, I messed it up. I ended up messing up this line. I messed it up even more. I think that's, what was that? So this is, I'm saying, is where they can potentially get up here. We even talked about this. If you look at here, we have a current move set to test 859 at top of zone with an eventual test of 959, which is up here. But I'm saying this for those that hang on, this is where before you start to see them start to ease back a bit. And so you're seeing the euro continue to move higher. But the cables, it's not taking its highs. But then again, like I said, look at the monster move you've already seen in the cable. So when we take a look at where support, they have to be here, 2472. I was taking a look to see what economic reports we have out today. We did have German IFO, but I'm looking here for the U.S. And we do have Dallas Fed Manufacturing Business Index, but that's not until 10:30 Eastern. So we're already up. Time for a break. Like I said, we're taking our time to make sure that we get some decent analysis. This whole area is good resistance here for the euro. Above this, all the way up to, we haven't pushed as a little area of 903, but really between here and 898 is pretty decent. But we're going to go on break. We'll take our break and we'll be back shortly. Thanks for joining us here on the Morning Edge webinar.